welcome to On Investors' Minds. I'm Tai Hui, the Chief Market Strategist for Asia Pacific at JP Morgan Asset Management, and thank you for giving us a few minutes of your time to understand what APAC investors are thinking about right now and how that fits in with building the right portfolio. So this episode was recorded on the 29th of January at 8 a.m. and I want to discuss the latest FOMC meeting that happens overnight. Now, at the first meeting of 2026, the FOMC kept federal rates unchanged at 3.5% to 3.75%, largely as expected by the markets. Two governors, Stephen Miran and Chris Waller, dissented in favor of a 25 basis point cut. The statement language was also leaning to the hawkish side of things. Economic activities was upgraded from moderate to solid. Job gains were described as low, but unemployment rate seems to be showing some signs of stabilization. And also, the prior phrasing about a rising downside risk to employment was removed from the statement. Now, in the press conference, Chair Powell affirmed confidence in Federal Reserve's independence. He also reiterated that the next move is most likely to be a rate cut, while signaling cuts are unlikely until it is clearer that tariff-related inflation effects are temporary. He also pointed towards improving growth prospects amid easier financial conditions and also the anticipated fiscal stimulus, especially some of the tax rebates that we could see later in this quarter. Now, our baseline is that the Fed remains on hold through at least the first half of this year. The statement suggests that the committee is seeing risks to its due mandates as broadly balanced and policy as near neutral. We expect inflation to re-accelerate in 2026 and peak around the middle of the year as fiscal stimulus supports spending and tariff costs are passing through, and also with hiring temporarily boosted by the fiscal stimulus. Combining this hiring boost with weaker labor supply growth, this should cap the unemployment rate. Now, the markets are currently pricing in one full cut with a 83% chance of another cut by year-end, which appears reasonable. Now, if the Supreme Court rules tariffs to be unlawful and also fiscal stimulus to be constrained by a change in House control later this year after the midterm, growth and inflation could dip below 2% by the end of the year, opening the door to additional easing in 2027. Now, given that the markets were already expecting the Fed to hold in this meeting and move away from a dovish bias, we expect market reaction to be relatively muted. Instead, the latest earnings from U.S. tech companies could be more influential to the Asian markets as their outlook could drive demand for semiconductors in Northeast Asia. The ongoing depreciation of the U.S. dollar should also help to drive capital flow into Asia Pacific, supporting both the region's equities and also fixed income. So thanks for listening. If you enjoyed this podcast, please share this with your friends and colleagues, and of course, consider subscribing. If you have any topics you'd like us to cover, please reach out to your JP Morgan Asset Management client advisors. I'm Tai Hui. I'll see you in our next episode to discuss what's on investors' minds. Meanwhile, stay informed and stay invested.
This content is a general communication being provided for informational purposes only. It is educational in nature and not designed to be taken as advice or a recommendation for any specific investment product, strategy, plan, feature, or other purpose in any jurisdiction, nor is it a commitment from JP Morgan Asset Management or any of its subsidiaries to participate in any of the transactions mentioned herein. Any examples used are generic, hypothetical, and for illustration purposes only. This material does not contain sufficient information to support an investment decision, and it should not be relied upon by you in evaluating the merits of investing in any securities or products. In addition, users should make an independent assessment of the legal, regulatory, tax, credit, and accounting implications and determine, together with their own financial professional, if any investment mentioned herein is believed to be appropriate to their personal goals. Investors should ensure that they obtain all available relevant information before making any investment. Any forecasts, figures, opinions, or investment techniques and strategies set out are for information purposes only based on certain assumptions and current market conditions and are subject to change without prior notice. All information presented herein is considered to be accurate at the time of production, but no warranty of accuracy is given and no liability in respect of any error or omission is accepted. It should be noted that investment involves risks. The value of investments and the income from them may fluctuate in accordance with market conditions and taxation agreements, and investors may not get back the full amount invested. Both past performance and yields are not reliable indicators of current and future results. JP Morgan Asset Management is the brand for the asset management business of JP Morgan Chase and Company and its affiliates worldwide.